Hi, this is Ken Boyd with the Accounting Accidentally website, where you'll find over 300 blog posts, and if you slide down to the middle of the page, you'll find links to over 400 YouTube videos. This is the second of two videos explaining weighted average shares outstanding. And what I want to talk about here is what's going on in the spreadsheet. So you'll see on January 1st that we start with 20,000 shares outstanding, and then we issue 10,000 more shares. And if we multiply the two, add the two together, we come up with 30,000 shares after issuing additional shares on February 1st. We next issue a 10% stock dividend, which means for every 100 shares of stock, we have 10 more. So 30,000 shares becomes 33,000 shares on March 1st. May 1st, we buy 5,000 shares of treasury stock. We take them out of the hands of the public and we put them in treasury stock, which reduces shares by 5,000, getting us a new total of 28,000. We have a 3-for-1 stock split, which means for every one share you now have 3. We multiply 28,000 shares times 3 for 84,000. And then finally, on October 1st, we reissue. We take 4,000 shares out of treasury stock and issue them to the public. And if I slide down a little bit, you'll see that 84,000 shares becomes 88,000. The tough part about weighted average shares is this fraction of a year. So for example, between January and February 1st, we have 20,000 shares outstanding. That's 1/12 of a year. Between March 1st and May 1st, we have 33,000 shares outstanding. That's 2/12 of a year. And you start to get the idea of how we're getting these fractions of a year. To calculate weighted average shares, we multiply across. So for example, January 1st, that adjustment, we had 20,000 shares for 1/12 of a year. We multiply that by 110% to account for the stock dividend that happened after January 1st, and we multiply by 3 to account for the split, the 3-for-1 split that happened after January 1st, and we get 5,500 shares. If I slide down and do another example, here the weighted average shares on June 1st after the split, you'll see that we multiply 84,000 shares times 4/12 of a year, the period from June 1st to October 1st. We do not make an adjustment for stock dividends and splits because that already is in that calculation. We come up with 28,000 shares. And finally, if we add up the total, we get in red 87,250 shares. And the whole reason that we do this is to have weighted average shares to use for the earnings per share calculation. So that's part 2 of that video. Remember, if you go over to Conference Room, I'm coming out with a new book next year, 25 Intermediate Accounting Spreadsheets and How to Use Them. You can get sample chapters of the book, how I indicate here. And it will be a combination of written text, the spreadsheets you see in these videos, and also links to the videos themselves. So 25 book topics. If you'd like to get sample chapters, email me at ken@stltest.net, which you see here. Thanks for watching, and we'll see you next time.